Hi, I'm Linus. Nowadays, from young investors to pre-retirees, people around the world are beginning to recognize the benefits of ESG investing and look at how the three factors impact a long-term investment or retirement planning. In view of this, we picked the most commonly asked questions and are pleased to introduce Jimond Wong, Senior Portfolio Manager, Fixed Income of Manulife Investment Management, who will share his outlook for investment opportunities in Asia ESG bonds. Let's learn from Jimond. So how does ESG investing impact those with retirement planning as a long-term goal and MPF investment?
ESG investing plays a vital role in retirement planning. By identifying and mitigating ESG risks, investors can better preserve capital for retirement. There are also significant opportunities for long-term investors. In Asia, the core role it plays in global sustainability issues opens avenues for capturing multi-decade environmental and social trends. At Manulife Investment Management, our ESG investing process prefers Asian corporate bonds with long-term sustainability plans and robust fundamentals. These bonds not only appeal to investors aiming to meet their retirement financial goals, but also those seeking positive outcomes for the environment and society they retire into.
How do you consider the E, S, and G aspects of investments?
In sustainable investing, the E, S, and G factors form the fundamental pillars. While the environmental aspect E is often more visually apparent due to media coverage, S and G are equally significant, especially in analyzing corporate bonds. S stands for social factors. For example, we need to identify companies with robust labor standards and effective product liability management. We assess how these companies manage human capital and contribute to positive social impact. Moving on to G, which represents governance factors. Here we focus on the quality of a company's management structure. We look for indicators such as independent and diverse boards coupled with strong business ethics. By carefully considering all these factors, investors can strategically position themselves for ESG opportunities, effectively address ESG risks, and most importantly, contribute to a positive impact on the environment, society, and governance.
Why should people consider Asia for ESG investing rather than other geographies?
While many sustainability concepts are universal, Asia faces specific challenges. Issues like water scarcity and typhoon exposure differ significantly from other regions such as Europe. Moreover, Asia plays a key role in addressing some global challenges. For example, with more than 60% of the world's population and as a major manufacturing hub consuming over 60% of the world's materials, Asia is responsible for over half of the world's emissions. And because of that, our transitioning into renewable energy has given us a more substantial role in manufacturing and adopting solar and wind power equipment. However, Asia is incredibly diverse, making it hard to generalize. Each country, from Japan and South Korea to China and the Philippines, has its unique market structures, demographics, and even language and culture. At Manulife, our strength comes from being deeply rooted in these communities. We have presence in 10 different Asian markets, which allow us to adapt our sustainable investing strategies to fit each unique context effectively and help generate better investment results.
What is your outlook for sustainable Asia fixed income, given high interest rate, persistent inflation, and a lower growth environment?
Our outlook for sustainable Asian fixed income remains positive over the long term, driven by several factors. First, high interest rates provide valuable carry and income, with major central banks approaching the end of their tightening cycle, supporting global and Asian bond markets. On the other hand, the deepening ESG opportunities in the market, especially in sectors like renewables, clean transport, and green buildings, indicates a sustainable path forward. We like Asian Pacific banks, underpinned by strong governance, diversified deposits, and sufficient capital ratios. Asia's renewable energy sector, particularly in India and China, presents promising opportunities, aligning with their ambitious national goals to increase renewable energy capacity.
Thank you, Jimond, for sharing with us where the ESG opportunities are in Asia fixed income. I hope you find our ideas insightful and relevant to your interests and retirement needs.